But now let's move to the interview of the week. My guest this week is Parker McCumber. He's a serial entrepreneur and is currently working on his doctorate of business administration with an emphasis on organizational leadership. And he's also a contributor at Young Voices, who specializes in economic policy and international affairs. And we talked about central bank digital currencies, CBDCs. He had an article in the American Thinker and I wanted to discuss it. Take it away. All right, Parker, so let's talk about CBDCs, central bank digital currencies. You wrote an article in the American Thinker in which you say a centralized bank digital currency would harm our economy. So for the listeners who previously might have heard about CBDCs and some of them who haven't, briefly explain what CBDCs are all about, and then let's get into why you think they're a threat.
Sure. So a central bank digital currency is similar to a cryptocurrency that we currently have. You think Bitcoin or Ethereum. However, it's controlled and operated by central banks of nations. And I think this is kind of a threat to the economy of anyone who implements a CBDC because it's going to inherently undermine the current banking, lending, and funding systems that allow a flow of credit in your economy.
Okay, and so you get into some of that in the article. Give us a TLDR on how it actually does that. How would it undermine the existing banking system if the CBDC is ultimately issued by a central bank? Wouldn't the central bank have all the controls in place for that not to happen?
So here's an example from the United States over the last couple months. We saw a handful of bank scares and bank runs caused by bank failures. Think Signature Bank, and SV Bank, and the issue that a CBDC could exacerbate, strictly speaking for banking, is that when you have a bank scare or a bank that's on the commercial side that's failing, the CBDC provides an instant and immediate transfer of your wealth from those commercial banks to the central bank. So you exacerbate the problem of a bank failure, and you see all these commercial banks rapidly closing or going under. And then it's a consolidation of power really through finance. So that's the first thing that kind of is concerning to me when you talk about a central bank digital currency. The second thing is that with a central bank digital currency, there's a centralization of wealth that the federal government essentially is able to control because they control the central bank. And this is concerning for individuals because it means that they have the potential, the power to track your spending history. They have you think bank transactions, they keep a list of how you're spending your money. It would also require you to provide personal information to set up those accounts or those digital wallets. So the federal government is collecting all of that data on the individual. And then they also have the potential to control financial spend. So if you think you're potentially a government could create a new law or something that says, drinking alcohol is a problem in our country. We're going to limit the amount of alcohol that can be purchased. And, maybe all of a sudden you're only allowed to spend $100 a week at a liquor store or something like that. So there's the potential for them to kind of curtail your ability to even use your money at that point.
Now, some of the arguments against some of the points you've made are that, it's a slippery slope, and ultimately this is just about the practicality. This is a very useful tool. This will get us to the new age of finance. This is something very useful, and you can trust your government to do the right thing here. Why are you so skeptical? Is it because the United States government is particularly good at disregarding people's privacy, or How do you think we would get to that point? Would this happen instantly? Is this ultimately the design, or do you think this will happen without necessarily the intention being there now to implement such a system?
So I would assume that there is the intent to consolidate power and then be able to leverage it. And the reason that I have that assumption is that a central bank digital currency is nothing new. We already have digital solutions that are going to address and provide the answers that a CBDC is supposed to address and provide. For example, Bitcoin, Ethereum, Litecoin, all these digital currencies that currently exist, They already offer faster transactions. They already offer safer transactions. And they're decentralized, so you're not giving up information, giving up your data's a form of power to the federal government that then can control and manipulate that or leverage it against policy to kind of enact or enforce their will.
Well, you talk about the similarities with existing cryptocurrencies. Of course, there are existing fees that people do pay when using Bitcoin and Ethereum. I would assume that some consumers would be incentivized to do the switch to a CBDC because, well, I know Americans pay a significant amount of money for wire transfers. It's quite expensive to send money from A to B. In Europe, we have a system that allows us to do instant transfers, and usually your bank charges you very little or gives you a free amount per month. So do you think that Americans will ultimately be swayed by the convenience and maybe disregard some of the downsides that you're bringing up?
Potentially, but I don't know if that's really something that's going to be a large scale, for example, dissuasion, like you said. CBDCs do offer, or at least the central bank kind of has stated, that they're going to be a very low cost solution. I argue that it's probably not low cost. It's just coming out of taxpayer dollars. So the fees are still going to be there. They're still going to exist. It's just being subsidized by the taxes that you're already paying.
And when it comes to the privacy argument, there's been for a very long time discussions about collection of data. This has started in the United States. It's extended to Europe to an extent as well. Usually for security reasons. These are, there's specific rules in place, what you can do, what Secret Service agencies and all these surveillance agencies can actually do. This is supposed to be a security aspect when it comes to terrorism and all of these aspects as well. One of the criticisms that we've had in Europe as well when it comes to the cryptocurrencies that you mentioned, Bitcoin, Ethereum, and so on, is that there's a lack of accountability, and that some entities, for instance, are able to circumvent sanctions. This is in the case of the war in Ukraine. Is one of the arguments that those cryptocurrencies, they don't have the necessary transparency, that we need to avoid those bad actors. How do you feel about that whole conversation about to what extent do we afford privacy to consumers, and to the other extent, what is necessary in a government to be able to surveil some of the transactions that go on? This is a big debate. Where do you stand?
So personally, I'm always going to side on the rights of an individual and their privacy and their financial freedom. In the United States, we have the notion of innocent until proven guilty. And you've seen some legislation in the past, think like the Patriot Act, that really kind of usurps that innocence or supposition of innocence, and is going to spy and collect data and kind of try to protect people from those evils or the circumventing policy. But I would argue that the vast majority of individuals are not involved in those kind of illegal or illicit things that they shouldn't be involved in. And I want to give people the benefit of the doubt to choose to obey the law and kind of be an upright and outstanding citizen. So I think that it's probably not a good policy. I kind of view it as inherently authoritarian if you're going to usurp that power and take away the presumption of innocence just because you want to prevent crime from taking place.
And arguably a large part of the illicit transactions happen still in good old cash. And that brings me to another point, which is what is the standing of cash in the future? In Europe, we have a large amount of member states, and they all have different rules when it comes to the use of cash. I would say that a country like Germany and Austria, those countries are probably responsible for blocking a lot of the new rules on restricting the use of cash. What does it look like in the United States? And I know that Americans, are very heavy users of credit cards. Taking out cash money can sometimes entail quite a lot of fees. A lot of Americans never seem to be really using cash. Is that where this is going? Are consumers already ditching cash for more convenient solutions that give them cash bags and points for hotels? And are we losing sort of that sense of the value of cash? Is that going away necessarily, maybe even without any government intervention?
So I kind of agree with you on that. I think that we are moving away from cash as a society, and we have been for quite some time, largely due to the transaction speed and convenience of credit cards and debit cards. So personally, I also am in line with that. I use a credit card a lot. The issue that I think we prevent with our current system is that those credit cards are being issued by third parties. It's not coming from the government. So there's still a buffer between you and your personal financials and the central bank being able to collect that data or freeze your assets. Currently, if you're in the United States and you have potentially you're being suspected of a crime or using your money for some kind of illegal purpose, you have to go through a judge. You need to get a warrant. You need to get a court order essentially to freeze those assets. And without the third party that's going through, and you're looking at a central bank, that's almost an immediate, capability for the government to have. So I prefer having that third party for personal security, for personal privacy, as well as you do get some of those maybe perks, like you said, the cash back, the points, the rewards points. They want to incentivize people because those are private businesses. They're on the market, and they want to incentivize people to use their product and their service. So you get more out of it. If you move over to a central bank digital currency, and that's quickly going to become a large ordeal when it happens, if it happens, there's no incentive for them to give you any benefit at that point. Because they know that they're going to beat the retail market for finance. So if the federal government takes control of a CBDC, and for example, they can exacerbate the problem of bank closures, and they can facilitate instant transfers from banks into the CBDC, you're looking at essentially a monopoly on credit and finance that could happen very quickly.
Well, how quickly can it then actually happen? Because you mentioned that there are people who think about the development of a CBDC in the US. We have a similar situation in Europe with the European Central Bank. There's a lot of thinking and committees and people having different thoughts about it. In terms of the chronology of where we are, how likely do you think this is to actually happen in the next 5 years? Maybe is the government waiting for a specific crisis that it will use in order to implement this? Or is this sort of a transition where you say it will happen rather soon?
So I think you're probably spot on when you mention a crisis, right? When there's hardships, hard times, that's an easy opportunity for an organization or the government to kind of collect power quickly. So I think, as you look forward, a lot of big names in finance, a lot of analysts are predicting that there's going to be pretty much a global recession, that's impending and will last for a few years. I would view that as an opportunity for the central banks to roll out a digital currency, because the proponents of a central bank are touting that the CBDCs would increase efficiency and allow the government to have a more direct and efficient control on finance. And they would argue, I'm sure, that having that power and capability would allow them to navigate us out of the recession. So they could leverage that to get buy-in to the CBDC. As far as the timeline that would take to implement, it's actually kind of scary to me. I think that infrastructure is probably already there and already in existence. I mean, when you think about the probably hundreds of thousands of digital currencies at this point that exist. The technology is out there, the code is out there, the algorithms are out there, all that stuff that's going to be necessary to put these things in place. And really at this point, it's just a matter of implementation. And when you see how quickly some different cryptocurrencies can pop up, from conceptualization to functionality, I would argue that it's probably not a very long process at all. I mean, maybe a couple months.
Well, that is very scary to me as a thought. We're getting to the end of it, and I wanted to just ask you this about sort of the political reactions to it, because while it may not necessarily necessitate legislation to be implemented in order to exist, it may very well have legislation to be stopped. And sort of where are the political fault lines on this? In Europe, we see when there is pushback and conversation, there's very little in the European Parliament on this issue. It's usually from the right. What does it look like in the US? Is there bipartisan opposition to some of these suggestions, or what does it look like?
So for the most part, I would argue that it's split pretty much down party lines comparably to the EU. The conservative side, some of those libertarian kind of thinkers, very much oppose this. And there is legislation that's been introduced to prevent this. However, you do have probably half of legislators that believe this is an efficient step. It's a step in maximizing finance for everyone. One of the quotes I shared in the article I wrote for the American Thinker on this was by Congressman Tom Emmer, who essentially said that a central bank digital currency, while it might increase the federal control over money and allow them to gain insight to your data and spending, it will deprive users of their privacy. And so he's opposing it on the privacy front. And I don't see a lot of lawmakers oppose it due to the economic issues that would arise. But it is split very harshly on that privacy issue.
Well, it'll be interesting to see how it develops. It appears to me that a lot of the developments in the US might also inform what happens in Europe, or vice versa. We have a tendency on both sides of the Atlantic of pinging off of each other on bad ideas. So hopefully it won't get that far. Parker, thank you so much for joining the ConsEUmer Podcast. And that concludes this week's episode of ConsEUmer. Thank you so much for listening. You can follow Parker McCumber on Twitter at Parker_McCumber. And of course, follow the Consumer Choice Center as well at Consumer Choice C. The article in the American Thinker will also be in the description of this episode. As always, I'm your host, Bill Wirtz, and I'll see you Thursday.